Alright guys, welcome back for video number 3 of structured trading on gold. Today we're going to go over some of the trades we decided to take on Tuesday the 23rd in the gold market. We're going to go over the strategy we applied and also the other trade that we're looking out for with another strategy applied to that. I'm going to show you guys exactly what we used. Again, it's the same principles, same fundamentals. You want to identify the trend direction, identify your supports and your resistances, and from there you can look to apply a specific strategy that you have that gives you an advantage or an edge over the markets, right? So the focal point here is not only to identify the fundamentals of trading, but it's also to know how to create a set of rules that gives you an advantage over the markets. Once you can create a set of rules that does that, you can then apply that strategy consistently, or those sets of rules consistently within the markets, and then you can look to capitalize on that. You're not going to have 100% wins, but you are definitely going to have a lot more wins than losses. All right, so that's kind of what we're trying to teach here and give you a better idea of, and that's going to give you that edge over the markets, and it's going to make you a little bit more confident every single time you decide to get into the market. So again, we're going to go over some of the structure we identified on gold. You can see we were in a sideways motion here on gold. Sideways motion meaning consolidation. A lot of people have different names for it. Either you're going to call it sideways or consolidation. You can use whatever you want, but there's three ways the market's going to trend: uptrend, downtrend, sideways, or consolidation, right? So you can see market was in a sideways movement for a little bit of time, and then finally broke above the resistance, used that as support, and then continued to break above this resistance here, use it as support, and then continued in that uptrend, right? So again, when you identify these things, it becomes a little bit more clear as to what the market is trying to do, right? So it's very important to identify this type of stuff first, and then look to try to apply a strategy to the markets. Without this, it's going to be a little bit more difficult to get a good entry in trades or to identify a good spot to look to trade, because you're going to try to trade a strategy at any point in the markets, and that's really going to get you chopped up. So we are identifying this to be an uptrend. If you can't really see it with your eyes, you can see what I used. I used eclipses and also sideways or horizontal lines that identify the support, resistance, support. An uptrend is identified by a higher high, a higher low, higher high, higher low, and a continuation in that direction. All right, so we actually took a trade up over here, right? And I'm going to show you guys some of the order flow tools that we used to identify this trade here. Right, so let's just zoom in just a little bit here, and I'm going to throw up my actual trade for you guys so you guys can see. I'm also going to play a video after this so you guys can see the actual trade running on live. You can see the profits that we decided to take on that one. I think we put about 5 contracts in. Yeah, so you can see 1, 2, 3, 4, 5, about 6 contracts actually we had on this trade short, or we faded it. I'm going to put up some of the order flow tools too so you guys can see. I'm going to unhide. Take a look at the studies that we have on here. I know it looks like a bit much for you guys, and usually I don't put this on because I want you guys to better see and understand the structure first, but we're going to leave this up for you guys just for the purpose of you understanding why we took the trade. All right, so we had a overnight high. You can see ON/H. This is what they call a overnight high, meaning this is the highest that price came to within that time frame, and then it started to fall back down, right? So you can see where we entered. We actually entered in at that overnight high. The reasons that we entered in is, you can see if you look to the right and to the left of this, you have what they call volume profiles. Volume profiles are essentially sideways bell curves, right? So that goes, if you don't know what a bell curve is, you can go Google it, you can understand it. Basically, it's supply and demand, or it identifies supply and demand. But you can see here, on these bell curves, you can see that the volume thins out. What that means is you have a lot of volume clustered up right here, and also right here. And right at this top area right over here, and also right over here, you guys can see that that was where we decided we wanted to place our trade, right? So if I turn this off, you guys see it a little bit better. Let's see, we actually look to place the trade here right at the thinning of the volume. This is one of the identified strategies you learn in TRADEPRO Academy, and you can actually apply whatever set of rules or qualifiers you want in here. My qualifiers for this specific type of trade are not going to be too much. If we hit a level of resistance, which This 95 close to 96 was a level of resistance for me. When you zoom out on a bigger time frame or range bar chart, it's a clear level or a peak of resistance, and this is where you see the volume really thin, right? So in order for the markets to move past this level, it has to first accumulate buyers, right? In order to do that, it has to come back down to where the volume is. If you guys have never heard this concept, one great concept that TradePro teaches is markets move from volume to volume. If you really want to learn this stuff and you really want to start to make some money in markets, I'm going to tell you right now, TradePro Academy has some of the best teachers I know, including myself, that will be able to help you identify and learn how to use order flow tools. But again, your first basic principles have to be in structure and price action. Without that, order flow tools are really going to do you no good. RSIs, VWAPs, moving averages, all that other stuff is really not going to help you in trading until you can identify structure, price action, and maybe even candlestick patterns, right? So, but again, back to what we were saying over here, volume really thinned out in this area. We hit a level of resistance, and right off that level of resistance is where we're looking to actually short that right back down into this general area right here where we eclipse this, right back down to the actual volume that comes in right over here. So let me highlight this for you guys. Let's extend an actual rectangle. You can see the volume clusters up right here, and we're trying to get this back into that level. It's what they call a scalp fade trade, meaning that the market is in an upward trend and we're trying to fade that back down, or we're going to say that price is going to hit this level of resistance, the volume being really thin, that people who are in this market are going to want to push this price back down, and then buyers are going to look to try to take advantage somewhere right around here or right back down here at the level of support, which is a prior resistance, right? It's going to push this market back down to this area. Then the buyers are going to step in and continue this trend direction, right? So that's the idea behind the trade that we were looking. And again, when you create a set of rules that give you an advantage over the markets, then you can consistently apply those rules to that specific trading strategy that you have, and it gives you a better advantage in making money in markets, right? So again, you don't want to try to complicate this. You want to keep it as simple as possible. But this is what we tried to apply here. This was a fade trade that we applied here, a scalp trade, and it worked out really well. I'm going to show you guys later on in the video, but let me pop this back up so you guys can see. That was our trade with about 6 contracts we had short there. You see where we took advantage of taking some profit, and the market did pop up a little bit and came right back down. Now, back to what we were saying with trading structure. If you didn't want to do that type of trade, you can continue in the trade direction. What that means is you can look to identify your next best opportunity, right? We didn't get enough support here at this level. So what that means is we're still looking to have this level as our support, right? You can do one of two things. You can look to try to buy the market on the dip back somewhere right around here, or you can wait out for more of a conservative entry, which is going to be right over here at 93 to 93.3. All right, so this is the area that you're actually looking for continuation. If this level breaks, it could potentially come into this level right here, which is 92.3. But once it breaks that level, more than likely you're going to see the market move back down into the volume clusters here, right? So, but however, that was one of the other trades we identified to take, and we looked to buy a dip right off this level of 93.3. You can see we waited out for that trade to come back, but when the market came back, we actually capitalized. Notice if I take all this off, I'm going to hide these studies for you guys. If I take all these studies off, we can identify here that the market actually pulled back right to that level of structure support, which was once resistance, and it held that level. This is an opportunity where you could say, okay, the market has come into my zone, apply that specific strategy and qualifiers that you have, and then look to trade that market or that area right there and capitalize on some points, right? So you can see the bounce off this level right here at 90, I would say 93, 92.8 maybe. Bounced right off of that and came right back into 94. So that was an easy maybe 2, almost 3 points on gold, which each point is about $100. So 2 to 3 points, you're looking at about $200 to $300 off one contract. All right, so if we had applied that trading strategy in this area, which we did for about 3 contracts, we did capitalize a good amount on that trade. But that was just one of the trades that we had. But looking at how the market reacted, just identifying these levels, the trend direction, the actual supports and resistances, you can see how great of a trade that would have actually came out to be. The market then started to move higher and higher from that level, and I think we peaked out almost at about 1500. Yeah, we're above that level. If we continue to move up into this, you're looking at 1503 already, and this is the 24th, I believe. Right? Yep, 24th was one of the days we decided to try to buy a dip off that opportunity, and you can see it's a very good opportunity for continuation up, and it went as high as about 1503 and probably continued higher than that. We got out a little bit earlier than that, but it was a good opportunity to trade within the direction, the trend direction. And you can see how profitable just applying specific rules and strategies to markets, how profitable it can be, because it gives you a better edge over the markets. But yes, that sums up our trading for gold. We're going to go ahead and play this video for you guys so you can see. If you guys have any questions, go ahead and pop them in on the YouTube channel. If not, you can TradePro Academy. If you guys do want to join, just go ahead and pop in that link, pop your information in there, and I can go ahead and get back to you, or any one of us here at TradePro Academy can get back to you. If you are really serious about trading, this is going to be a good area to start. Learn how to identify structure and price action, and then apply qualifiers or order flow tools to give you an advantage and an edge over the markets. All right, guys. You guys take care. We'll be back again with another video, maybe next week, Tuesday, or I'll probably post it maybe on Sunday. I have another video I want to post for you guys. But this is just a quick fade trade